Happy Friday. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Lewton. Good morning, Lawrence.
Good morning, and glad this week is over.
What a wild week. Let's have a look at the markets right now. The CoinDesk Bitcoin price XBX index is over the $30,000 threshold at 30,642. Just gliding on up over 8% over the past 24 hours. The CoinDesk Ether price ETX index is at 2115, also soaring over 9%. And the DFX CoinDesk's DeFi index is at 150, making gains of over 18%. The most reliable reference prices for institutions since 2014 and now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. What a wild and volatile week, Lawrence. We're also learning that Elon Musk is not interested in Twitter much, and the markets are up.
Well, it's not that he's not interested in Twitter much. What he's now expressing concern with the bots. I don't know if that's an excuse, but and so he's holding off on the purchase of Twitter. That's brought the stock back down to about $40 or so, 11% off of yesterday's close. The thinking here is, and I think, it's, if you want to tie crypto into it, if you look at the hype around Luna, Terra, et cetera, and UST and the like, if you ever use crypto Twitter, there were so many bots pushing this thing. It just nonstop. Any quote, any discussion on Twitter about crypto, there was a swarm of bots that would just come out and say, you should buy Luna, it's going to the moon, that's the name, that kind of stuff, over and over again. And so many people got crushed. I'm not saying that that Elon Musk directly looked at the Luna situation and said, oh, geez, we got to do something about these bots, this is dangerous. But I'm not saying that. I mean, it's got to be in everyone's mind, at least if you follow crypto Twitter the way he does, that something horrible happened, and in part Twitter is to blame, or the people on Twitter are to blame.
Well, I find it interesting that the markets are up, and this is after it seems to have gotten over the collapse of Terra Luna, but you never know. We could see more volatility here. We have Terra UST now trading at about 10 cents according to CoinDesk data. It went as low as 6 cents over the past 24 hours. And Luna,
with some people are locked out of their situations, and they're locked in their UST, and so as they try to redeem at some point for Luna and then liquidate somehow or what have you.
I mean, we're seeing so many messages from folks who have been just lost their life savings or lost, their livelihoods over this. So our heart goes out to those people who are suffering in this way. Also, the Terra blockchain, it halted twice yesterday. They're trying to prevent attackers who can now, hack the chain very cheaply. Also hearing that from South Korean media sources reporting that Do Kwon's wife has requested police protection after receiving ominous visits from strangers seeking the whereabouts of her husband.
A little humility from the start would have been very helpful, but that's where we are now.
All right. Let's check in with all this stablecoin craziness with our spotlight guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Algorithmic stablecoin UST's $14 billion collapse has sent ripples across the stablecoin market. Tether temporarily lost its $1 peg, dipping to 96 cents according to CoinDesk data. Algorithmic stablecoin Neutrino USD also slipped below its USD dollar peg. Joining us now is Mike Coscetta, Chief Revenue Officer at stablecoin developer and issuer Paxos. Hi there, Mike. Thanks for joining us. So Paxos issues the USDP, Paxos Standard stablecoin. It's not algorithmic, it's collateralized. But I wonder, is there any impact from the UST Luna collapse?
Well, first of all, good morning, and thank you for having me. It's really great to be here. And we love the opportunity to share our view on the markets and our view on what stablecoins are and should be. And Paxos has taken a stance from a very early stage that the stablecoin should be stable, that it should be backed, it should be regulated, it should be transparent. And when you start to see a proliferation in the market of stablecoins that call themselves that, and that's clearly not what they are, and now you have very, very stark evidence and some terrible stories associated with what happens when stablecoins become casinos and games. You see a lot of ripples around the market, and we are at least of the stance that this may, in the long run, be exactly what the industry needs to clean out and clear out some of the non-stable elements of the business, and to get people back to knowing what stablecoin is a dollar should be a dollar.
Mike, you talk about some of the clearing that needs to happen in the business. Even with collateralized stablecoins, we have a big differentiation between certain stablecoins that show mostly cash and cash equivalents on their balance sheet and easily redeemable, compared to others which may have mostly commercial paper, illiquid assets on their balance sheet. Does this okay, let's stop beating around the bush. Tether. And we saw Tether's price go below $1 it briefly, and then it shot back up. Are we going to see more of this? Are we going to see more of this market concern and skepticism about these stablecoins that are collateralized but not collateralized with liquid assets?
Yeah, I think, anytime you see a market take a hit and you look at all the red on all these charts, it's nice to see some green today and some stability in some places we haven't seen it. But there's always a reverberation effect, and it takes the market a little bit of time to recover, and it gives the market a chance to really assess what should be moving forward. You mentioned things backed, but coins backed mostly by cash. Mostly is a really dangerous word. Mostly does not mean cash. It means mostly cash. And when things go wrong, those percentages really start to matter. And, again, it's our belief, and I believe the belief of the regulators and our governments that, the stable coins should be backed 100% by cash and cash equivalents, so that if people do need the money and they need to withdraw, they need to liquidate, there's no risk, there's no delay, there's no slippage. It's a dollar. A dollar in is a dollar out. If it's not a dollar. And to call it that, I think, is just a really dangerous thing for the industry and for the market. And we're looking forward to seeing this as an opportunity to really ensure that stable coins are operated the right way. Algorithms can be gamed, algorithms can be changed. Backing things with mostly cash is great when things are great. And when things start to weaken a little bit, you really start to see them collapse. And, we saw this in 07, 08 with the traditional financial markets. You're seeing it now, with some of these coins, and, hopefully we can get past this soon, and really move on to really the future of stable coins, which should be, again, a fully reserve-backed, regulated, transparent, model.
Just want to, explain to the viewers the importance of stable coins compared to cryptocurrencies. A lot of investors, traders trade in and out of volatile Bitcoin positions or other crypto positions in order to get into stable coins if they want to, eliminate that possibility of volatility, and they just want to enter into a stable currency for a while as the market volatility eases up. And so stable coins are just more easier to access than a US dollar, because then you'd have to go through all these fees to exit an exchange into US dollar. Rather than that, you could just use a stable coin because it's native to the crypto world. Just want to ask you, but can algorithmic stablecoins work, or they just don't, and they should always be collateralized?
I think the second you call it an algorithmic stablecoin, you've stopped calling it a stablecoin. There's nothing stable in many of these cases about how those algorithms are based, because the assets underlying them that's shifting the reserves generally are not stable themselves. I think what consumers want is they want certainty. What regulators want is they want transparency. And you put these two things together, and you have the forward-looking, ability to turn a stablecoin into a very ubiquitous, very high utility asset. If the value of that asset underlying is constantly shifting, well, then it looks less like a stablecoin. It may be an investment. It may be an amazing investment. It may be a great store of value for certain cases, but that doesn't make it a stablecoin. And I think really the ubiquity and the utility of stablecoins will come from when they're all pegged the same way, they're all reserve backed the same way, and when those reserves can be audited and transparently seen by anyone involved. So again, I know if I'm going to put my life savings into something as a savings, that I'm going to be able to pull it out anytime I need, that it's truly my money, it's truly liquid, it's truly accessible, and I don't have to worry about all these different market conditions to line up, for me to be able to have my money there. Doesn't mean there's not a place for investments and, upside and to the moon mentality of many crypto assets. I mean, that's why we're all here. The industry has gone through enough winters, but also enough summers, that there's a future for any type of coin with any type of backing. But again, I don't think those algorithmic coins should be called stable coins.
So going forward, of course, stablecoins are the backbone, or at least an integral part of DeFi. And what do you think that means in terms of the growth of the DeFi market with the lack of algorithmic stablecoins? I know you don't like that expression, but nonetheless, that's what we have here. When UST was particularly popular on DeFi, USDC is popular as well. Do you think that what's DeFi going to look like now? Are we going to see lower rates because there'll be more of a demand for asset-backed, for collateralized stablecoins, or do you think that we might, see an implosion of the market? What's that future look like to you?
I would go back to a few very basic economic principles that despite crypto being a brand new industry and with a ton of new innovation, a lot of the same economic factors still come to play. Number one, there's no free lunch. So when you see 18, 19, 20% returns, those generally have to be coming from someplace that's likely unsustainable. So I think you're going to see, I don't want to say a collapse, but you'll probably see a deterioration in many of those types of programs. The second thing is when you look at the proliferation of DeFi protocols and DeFi tokens and all the different innovation around decentralized workflow and decentralized processes, I love what that means for the future. And I think there's a giant opportunity, for innovation in all decentralized aspects of work. However, I think, again, when you see a new industry pop up, sometimes there's opportunism and sometimes there are things that look great and may be great for a very short time under certain market conditions, but in the long run really just don't make sense. So what this does to me, this gives the industry a chance to really figure out what are the long-term protocols, what are the long-term DeFi workflows that make sense. How do you properly incentivize and reward people for participating in those decentralized economies? And I think many of them will go away. I just think it's inevitable. And I think out of that, many new ones will pop up, and you'll see a different level of rigor put around what it takes to be a global, ubiquitous, DeFi asset, DeFi protocol, DeFi workflow. And that's where I think the long-term innovation will come in the market. So again, I think there's an opportunity that comes out of this. As rough as the past, short term has been, I think, again, you'll start to see a cleaning of this industry, and the DeFi aspects, really start to clarify which ones are viable and which ones were, maybe just a short-term opportunity.
Yeah. Michael, I just want to maybe address, what the appeal of UST was for many folks in the Terra Luna ecosystem. And that was, this idea that it was this decentralized algorithmic stablecoin that wasn't beholden to any entity. In the end, it was neither decentralized nor algorithmic. It wasn't even a stablecoin, but nevertheless, that was the idea that was pitched to them. And so they didn't, they didn't feel that a centralized stablecoin like a Tether, like a USDC, like a Paxos that was backed by, fully backed by the US dollar and controlled by a centralized or a private entity that was making sure that the collateral was there, was adequate for the DeFi space, for the crypto world, because anytime some sort of government could go in and potentially seize those assets or close down accounts. So they really wanted this decentralized stablecoin. And so I wonder what you would say to those folks.
Yeah, I think there's a future for decentralization all over the board. I think I understand and see the desire for decentralization from a government standpoint, from a freedom and kind of liberty standpoint, and from a transparency standpoint as well. The only thing I would say is that the vast majority of the world is still operating in the confines of a very traditional financial system and a very traditional legal system. And to operate in those systems and with those customers and with those partners, very often you have to abide by some aspect of regulation, transparency, audit, or some aspect of affirmation. And whether it be KYC, KYT, and all the things that all financial institutions have to do to prove and to show that this money is moving properly, safely, securely, and legally. And that is the vast majority of money moving around the world today. So is there a future for a decentralized access to money in a global, transparent way? There probably is. But again, I think to call it a stable coin was problem number one. To back it in a way that wasn't potentially sustainable is problem number two, because if anything, it actually just draws more scrutiny against the ability to do this in a decentralized way in the future versus having done it in a relatively pegged or stable way, from the beginning. Not to say that our own dollar doesn't have its own problems with 8% inflation and supply chain issues and all the other things that I think draw natural scrutiny, to the idea of pegging to a dollar. But I think at least in the short term and the medium term, the way to go is going to be to continue to build financial instruments in a way that people understand, that they know, that regulators understand and know. That's to me where the real mass adoption and the broad adoption comes from.
So I do want to get to your latest foray into Brazil with Nubank, but before we do, this issue is a very important issue in Europe, and Europe is looking at potentially banning certain stablecoins if they get too big. What's your take on that? And it seems to have extra impetus now with this, with the collapse of UST. What's your take on what the regulators in Europe want to do, and then also too, as you advance in Brazil, what is that structure like? What's going on there, and what's the general approach?
Sure. A few different things in your question, obviously. I don't know the details of what the EU is going to propose. I mean, the EU has a hard time getting alignment and getting clarity among its member countries to really do any form of broad legislation around financial instruments, but we'll see. I think, again, what should come out of this is that the EU, the US government, whoever sees that there's a place for private stablecoins, but that they have to abide by a certain set of open rules and a certain set of regulations that make it safe and secure for the end user, for the institution, for the partner bank, for whoever's going to be touching this, to feel confident and safe that this money, is secure. And I think that's a win for everyone. Waiting for the European, central bank and authorities or the US government to go issue its own coin in its place, I think is going to be, quite a long time in the making. When you look at Brazil, and you mentioned Brazil, what you see there is a craving for access to stability and a craving for access to the financial system in a way that, digital infrastructure makes it a more inclusive environment. And, you look at the newest launch we have with Nubank, they have 53 million users. They don't have a single bank location in their entire, infrastructure. Their infrastructure is purely digital. And it now gives all those users the ability to buy and sell Bitcoin and Ethereum. We've seen, long history in Brazil of looking for access to US dollars. In Brazil and other Latin American countries, sometimes the only way to get access to dollars is through digital means, through a stable coin. And, we're happy to be the provider for Mercado Libre. We're happy to be the provider for PayPal, and of course, USDP and Binance as well. And we think there's a lot more demand that'll come for stablecoins in a region like Latin and Central America, where there has been so much financial and economic instability for many, many, many decades.
All right. Michael, we got to wrap it there, but congratulations on your partnership with Nubank and expansion into Brazil. Thank you so much for joining us. That was Paxos Chief Revenue Officer, Michael Coscetta. Coming up, we've got a crypto markets update with derivatives trading firm GSR Markets. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index at $30,521, shooting up over 8% over the past 24 hours. The CoinDesk Ether price ETX index at $20.94, also soaring above 8%. And the DFX CoinDesk DeFi index is skyrocketing over 18% over the past 24 hours.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
We might have seen some green on the screens today, but this whole week has been anything but smooth. So joining us now to discuss the crypto markets is Benoit Bosc. He is global head of product at GSR Markets. Welcome, Benoit.
Hi, and good morning, and thanks again for having me. Certainly has been a very tough week in the market, and this relief rally is more than welcome. I think.
I wanted to get your overall impression of how the market, beyond UST and beyond Luna, just the other currencies, particularly Bitcoin and ETH, how they reacted to this, to what happened, to this collapse. Do you think that it showed resilience? Did it show that there were some weaknesses and some sort of a problem in general? Or were some of these sell-offs not even related necessarily to the collapse of UST, but all part of a third exogenous variable, such as what's going on with the Fed?
Well, I think it started with the Fed, really, and you saw that over last weekend, where the concerns of the previous week over what the Fed would do and how quickly they would raise rates started creating all of this anxiety in macro markets and all risk assets. Then over the weekend, what's most liquid really is crypto. And obviously, that's where people turn to for liquidity. And that's somewhat kick-started this whole process. And that's where you saw the first sign of the UST Terra issue with the initial depegging. Now, I think what you're mentioning in your question is very true. We're seeing people refocus on Bitcoin and Ethereum. And you saw Bitcoin dominance increase and go back above 40%, which is, the part of Bitcoin in the crypto market. So it's going back as a crypto safe haven, if you want. I think Ethereum saw the same. A lot of the DeFi protocol, a lot of the altcoins were under a lot of pressure this week. They're rallying over 20% in some cases today. So it's pretty good to see that. And I think a good sign for the industry in general, but certainly, the theme of this week, as described by your previous host, was stablecoins, was what happened with UST Terra, $50 billion wiped out from the market, a lot of retail users affected, a lot of investors, crypto firms very affected. Obviously, we don't know how far the ramifications, the contagion, it will take like a few weeks or so to even get a sense of what actually happened. But right now, the markets, I think, are treating it as an isolated, case and allowing for other fundamentally sound protocols to catch a bit of a break.
Do you think the Luna Foundation Guard buying up all that Bitcoin and then essentially lending it out to market makers and who we're assuming sold it onto the market for UST, is that what caused this collapse in price earlier in the week? And now we're seeing that kind of ease up and bounce back up?
I don't necessarily think that that's the issue per se. I think it's broader than that. And even if you look at the holdings, like obviously of the LFG, obviously they were significant, but it's not necessarily it is but one of the factors. I think what happened with UST and Luna has more to do with the broader sell-off, bringing both of those market cap closer together and allowing for, creating concerns basically about the backing of the stablecoin, which, as was previously described, really needed to be collateralized by Luna. And so as those market cap crossed, this was a pretty momentous event that led to the subsequent sell-off and the hyperinflation we're seeing now.
Your firm sees a lot of flows in general and can kind of get a sense of how the market is reacting to things. Anything interesting that came out of that? I mean, who was doing a lot of the selling? Who was doing a lot of the buying? That kind of thing. And when and how? I mean, what's the overall impression you got over the past week in terms of just from your perch?
It's been It's been an interesting week for sure. And we've had a lot of people reach out, a lot of concerned parties wondering, who also were the weak points in the system. We are fortunately very well capitalized with strong risk management. A lot of people in our management team had traditional portfolio experience, even like me, were traders during the great financial crisis, which informs how we look at things and the kind of decisions that we make around those times, which still has a lot of opportunity, and we look to leverage this position. So we've been up and running and active throughout this time and trying to facilitate liquidity for all of our clients. We haven't seen any particular action. I think there is a lot of rumor and conspiracy theories about concerted attacks on the system, on that particular protocol. I'm yet to see a substantive evidence that this was the case.
Right. Conspiracy theories are running wild. I wonder if you can point out to any trends like institutional versus retail, or, just looking at the derivatives markets, how are traders positioning themselves?
So interestingly, because of this very rapid sell-off, we are in a zone in Bitcoin below 30,000, which has very little open interest. So 30,000 is likely to act, and that's what we're seeing today, as a stabilizer, as there is more options on that strike that will attract, that will kind of pose the market there, as there is more gamma. Below that, basically no man's land until you get back to the 20,000 region. So hopefully we get to stay here and consolidate and open some of those strikes that will help stabilize the market. For the other side of your question about retail versus institutional, I think you could tell from the volumes on all exchanges that this was pretty widespread panic, and hopefully we get to the capitulation level that will allow for this market to resume and also clean the house, like refocus on fundamentals. We have a lot of hidden leverage in the DeFi ecosystem from composability, and where $1 gets traded many different times and might mean that the actual TVL that's captured from just this initial $1 in cash, maybe $5, $10, $20. So we need some of that leverage, some of that hidden leverage. That's very similar to what happened with the credit crisis, like over 10 years ago, to exit the market a little bit for things to be a little bit more sane. But right now, everyone's been active, and really, again, my thoughts really go out to retail users that were affected. There's a lot of very sad story where people have lost a considerable amount of their wealth, and really hope that everyone just stay the course and gets to rebuild, gets to do things different.
Well, try not to invest anything that you can't afford to lose, I guess, there. Benoit, we got to wrap it there, but thank you so much for joining us. That was GSR Markets Global Head of Product, Benoit Bosc. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Let's say hello to CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick.
Good morning. Happy Friday.
Happy Friday. Yeah. All right. So yesterday you gave us a preview of hearings with Janet Yellen, FTX. What happened?
Yeah, they were both pretty interesting, I would say, for different reasons. So the House Agriculture Committee hearing with FTX, basically, you saw, CME and the Futures Industry Association, the trade group, arguing that FTX's proposal to cut out intermediaries in settling derivatives trades was potentially dangerous. It could extend beyond just crypto derivatives to other products. Basically, the traditional old guard was not happy with it. Sam Bankman-Fried of FTX said that he doesn't plan to yet go beyond crypto derivatives. He's promised it's safe. And really, I think this hearing was mostly a fact-finding mission. The CFTC will hold a roundtable with industry participants later this month, so we'll also keep an eye on that. But at the end of the day, it is the CFTC that's going to have to make this decision. I'm not sure, to what extent the House is going to really get involved in, pressuring the CFTC one way or another. As far as the House Financial Services Committee hearing went, this was with Janet Yellen, and there were really two main topics, I think. One was inflation, which makes sense. It's a really huge topic for American voters. It's a pretty important issue for people who are trying to not lose all their money, trying to buy just everyday goods and services. So clearly an important topic of information. The other topic, oddly enough, was the UST collapse. So we're at a point now where this thing has, this stablecoin depegging has drawn a lot of attention on Capitol Hill. We had several lawmakers asking questions about whether or not algorithmic stablecoins are, similar to asset-backed stablecoins, whether or not any lessons should be, applied from asset-backed stablecoins to these, UST-like products, and also what kind of regulations should be enacted. And Janet Yellen mostly called on Congress to, take action. It seems like FSOC, the Financial Stability Oversight Council, doesn't really, seem likely to take any immediate action, but remains to be seen whether that will hold given everything we've learned over the last day.
I kind of want to get back to a little bit to the SBF hearing, and it might not seem like it's necessarily related to any regulation of stablecoins, but in some way it is, and that is this: SBF is going before our legislators. The second biggest donor to President Biden's campaign. He's a very generous donor in general to political causes. How much of a factor do you think that plays into ultimately when it comes to how Congress will approach regulation?
So what's really interesting is that, as you know, SBF has donated a lot. He's currently almost stirring up chaos in a Oregon congressional district by donating to a candidate. But a lot of his donations seem kind of really focused on non-crypto issues, right? The Oregon one that I just mentioned, it seems that one of his concerns there was pandemic preparedness and environmental issues. His donations to Biden just came out of nowhere, and as far as I can tell, he hasn't so far he hasn't really had any kind of public sit down with the president or tried to have a public sit down with the president to talk about crypto. So I'm sure this is something that people are considering. Yeah,
it makes
I'm
it
sure
tough.
Something people are considering, but
yeah, but at the same time, it's if he gives money to all these causes and he's just sitting around like, hey, you like my donation? They kind of aren't going to be like, yes, thank you. By the way, we're gonna regulate you and make your life miserable. It might give them second thoughts. Yes, it might be publicly about COVID preparedness. It might be about environmental issues, etc. But at the end of the day, they know who buttered that bread.
Yeah, that's true. And I think, probably the example we're going to have to look to here is what happens with this CFTC proposal. If FTX really does want to leverage, SBF's donations, this is the perfect time to do it because this is an actual material product that FTX wants to launch that the CFTC is considering but has not committed to approving yet. There's a lot of opposition from traditional financial firms to this proposal. So, I think how FTX behaves and how SBF, behaves over the next coming, months and weeks regarding to this proposal will really show us, to what extent his bags, to put in the slightly crude way, are influencing decisions in DC.
Yeah. All right. Well, can't wait to find out. Nick, have yourself a great weekend. That was CoinDesk Managing Editor of Gold Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right. One last word on the Terra Luna collapse. So over the past few months, Lawrence, we've been speaking to academics, experts, Do Kwon himself, the creator of Terra Luna, to challenge whether algorithmic stablecoins like UST could fall apart. We ask the hard questions so that you can be informed, and time again, the warnings were clear, and we have this retrospective.
What do you say to those who argue that algorithmic stablecoins are actually the most unstable type of stablecoins there is, and that they shouldn't even be called stablecoins?
I think that type of stereotype is a perfect recipe to get wrecked. And what I like to say is that silence is a perfectly good option if stupid.
If a major crisis came along, that could potentially destabilize those assumptions. Does that make Terra Luna vulnerable?
Well, I mean, the same argument could apply to any currency regime. So for the same reason, would you deprive developing countries of the ability to have, sovereign monetary policy? And I think the answer is no.
There's just nothing new here. I mean, you've got, another founder, yet again, sort of jurisdiction hopping and under investigation by the SEC and using lawyers to dodge those inquiries and claiming that it doesn't matter. And
out of all the stable coins out there in existence right now, which ones give you the most cause for concern?
I think algorithmic stablecoins are particularly vulnerable because of their design. What
would trigger a run on an algorithmic stablecoin?
I know Terra Luna is different in terms of its ecosystem play, but the basic vulnerability is still there. You have concentration risk in holders of the balancer or investment token. Because of that concentration risk, there's the potential for individuals or groups acting in consortium to move markets in significant ways. If I'm reliant on the perpetual stability of the Terra ecosystem for my money to be stable, it's not likely I'm going to use that.
Well, let's step back for a second here, because I think maybe explain to the viewers the role of UST currently and why they're purchasing all this Bitcoin for their books, and really what is the, is it a Ponzi scheme?
The reserves were not something that were originally in the ecosystem design. The reserves is something that have come after. I look at this and I think the fact that Terra is adding to this reserves or acknowledging the need to reserves suggests to me that they don't think the ecosystem in and of itself is sufficient to be able to keep this peg, which is not what the original design was. This is something that's come after.
The Luna Foundation Guard, and so this is this group of Do Kwon and 3 or 4 other insiders that control the keys for a few $1 billion, and they've been buying Bitcoin with it ostensibly to shore up UST, their pretend stablecoin.
They saw this coming, and by design, they're supposed to mint Luna to stabilize the peg, but now they're not doing that. So does their initial model just not work?
Their initial model doesn't work because it causes a death spiral.
There is hype, but I would also add that there are, I would venture to say, an increasing number of doubters on whether particularly the Anchor protocol is sustainable.
It's all reliant on one fake, unsustainable protocol that's giving 20% interest for free, kind of like free Uber rides or free deliveries of 50% off Grubhub when they enter your market or something like that. It's unsustainable. They'll run out of money in the next couple of months.
How would a collapse of this specific, stablecoin potentially lead to some sort of systemic risk?
Could the utilization of the Bitcoin reserve transmit volatility across the crypto ecosystem? It would seem obvious that it could.
We had Do Kwon on here a few months ago. He said, well, the economics of Luna are much different than what you saw with Titan and Iron back a few months ago, which famously imploded. Is that really the case, or is that just sort of something that, he's just making up?
Yeah, I mean, the mechanism is basically exactly the same as the other ones. That mechanism works because they're paying to pump up the price of Luna while they exit their position. So the longer they can keep this thing going, the more Luna they can sell. That's real Bitcoin that they bought. If they can get out of this holding billions of dollars of Bitcoin at the end of the day, if they can, just continue to sell Luna into the open market and buy real estate in Manhattan, Long Island, or whatever it is they do with their money, like the longer they can keep this thing going, the more money they make. So there's a lot of incentives for the OTC desks and the Luna team to kind of work together to keep the game going.
It was observed that the whole thing was fractional. It's kind of like a fractional reserve central bank. And so people have been warning that this peg could come undone if it's fractional. Everybody can see where the liquidations level are. And, selling into the market will push down the collateral, particularly the Luna token, which has, a very narrow pool of buyers and value only associated with this stablecoin.
Check yourself before you get on board with supposedly bullish narratives. I think it's really important to have a critical eye and not cheerlead things just because somebody says they like Bitcoin and, the narrative seems mildly bullish. I think this is probably the worst false narrative that we've seen in the Bitcoin space since the fake S2F models, which are obviously really embarrassing for Bitcoiners to try to be pushing to anybody that understood stats and math and finance. We kind of got laughed out of the room with the S2F models. And I think something like this is, equally just getting egg on the face of Bitcoiners that have been cheering on a total Ponzi scheme and a scammer.
Do you eventually see algorithmic stablecoins like Terra surpassing the market cap of, say, Tether and the use of Tether?
It's close to 10 billion now, so it only has to 7x, right?
And what is your outlook for 2022?
Year, so I think we'll get there.
Lawrence, thank goodness they didn't get any bigger. I mean, I just remember seeing how they were gaining in market cap and thinking, oh my gosh, if this explodes like, the academics and experts say that it will, it's going to cause a lot of losses for just ordinary folks. So what are some of the lessons learned?
It did cause a lot of losses. It did cause a lot of losses for ordinary folks. A lot of people did lose their money. A lot of people did lose their life savings. A lot of people did things as a result of it, of losing so much, that are horrible, that will affect their families for decades and generations. This is ultimately, when we had that interview with Do Kwon, and he's been out there repeatedly all over the place, incredible amounts of arrogance. And people should actually be angry at him, because what he did was he shouted down anybody who had legitimate questions. He humiliated them on social media. He attacked them. He sent people out after them on social media. And also you had all these bots. We talked earlier about Elon Musk wanting to curb the bots and being concerned about buying Twitter because of them. This is real. Those bots convinced a lot of people to go out there and subscribe to this idea that was ultimately a scam. And we have to be vigilant as journalists to constantly ask those questions and not take any nonsense, and I'm holding back on the real word that I want to use, from people who are, they act so arrogantly about their models, and they refuse to answer real questions, and they use personal attacks afterwards. This is enough.
Right.
People should wake up in the crypto market and say, stop it already. If this is going to be a real market, if this is going to be a real industry, if this is really going to be a revolution, take it seriously. I'm sorry.
That was certainly, no, I totally understand, Lawrence. I mean, when we interviewed Do Kwon, asking legitimate questions, I was shocked at the response. And then later on, the ad hominem attacks over social media, because these are legitimate questions. And you would expect, someone who is seriously, going through these problems would come up with a serious answer. And what we got was just puerile hubris and just dismissive
and these unfortunate
comments.
These unfortunate people that put all their money behind, look, people, sadly, we talk about doing your own research and things like that. Unfortunately, a lot of people don't have the skill set to do their own research. They're not academics. They're not
especially
analysts.
When there's so much misinformation out there.
Yeah. They're bots. They're literally bots going out on Twitter, confusing people. And they don't understand the technology behind what they're looking at. That doesn't necessarily, or the economics.
Well, I think the lesson here certainly is to view things with a critical eye. And if everyone is on this hopium tide and, cheering rah, 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 something that seems too good to be true, it probably is too good to be true. And with that, I want to check in with Crypto Twitter for our tweet of the day. This is from Justin Sun. You know, Terra has just collapsed. He's tweeting his own algorithmic stablecoin, USDD. Mining is live now on Just Lend with 40% APR. You can now deposit your USDD at Just Lend. Again, folks.
Remember what I just said. Pay attention, everyone. Pay attention.
Yeah. This is crypto. Doesn't end. So be vigilant and be critical. All right, that's it for First Mover. Lawrence, what a week. Have yourself a great weekend. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern, all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
The Terra turmoil continues. Welcome to the Daily Forecast, May 13th, 2022. I'm Michael Coscetta of Forecast, covering all things blockchain. Terra troubles show no signs of letting up. After a brief shutdown overnight, the network was halted indefinitely Friday morning in Asia. Meanwhile, questions over Terraform Labs founder Do Kwon's whereabouts have arisen. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a look at what's happening in the stablecoin space. First up, the Terra network has shut down indefinitely. The network officially halted block production just before 10 a.m. on Friday in Hong Kong. Terra has said validators are working on a plan to restart the network, but did not release any further details. The move follows an earlier shutdown of the blockchain that lasted more than an hour and a half in the early hours of Friday in Asia after fears of a governance attack were raised. A governance attack is a form of hostile blockchain takeover when a single party controls at least 50% of a network's governance tokens, giving them rights to majority voting power in the ecosystem. The plunge in the price of Terra's governance token Luna significantly reduced the cost of attempting such a takeover. Its price had plummeted from around $80 just a week ago to less than 1 cent by Friday morning in Asia. Terra later announced that validators were applying a patch disabling delegations, which involves staking tokens to a public validator node to earn further rewards before block production resumed briefly. Terra's algorithmic stablecoin UST had yet to regain its peg to the greenback and was trading at around 20 US cents by Friday morning. The UST's peg to the dollar is maintained by regulating the supply of Luna, and on Thursday, Terra proposed an upgrade to increase the production of Luna in an attempt to save the peg. Meanwhile, the world's largest crypto exchange, Binance, has said it is delisting several spot trading pairs linked to both UST and Luna, though it has not given a reason for making the move. Staying on the story, the wife of Terraform Labs CEO Do Kwon has requested police protection after an uninvited guest came to their home looking for him. Forecast Danny Park reports.
Local police in the Seongdong district of Seoul have confirmed to Forecast that they received a report from Do Kwon's wife about a visit from a stranger early on Thursday evening. The unidentified person had waited for a resident to open the encoded gate at the apartment complex before ringing the doorbell at Kwon's private home. When his wife answered the door, the stranger asked if Kwon was inside before running away. Kwon's wife has since been designated as being subject to special safety measures after requesting emergency personal protection. The police say they are still tracking the intruder for charges of breaking and entering based on what's been presented. The person's identity remains unknown, as does whether they had invested in Terra's cryptocurrencies. According to a local media report, Kwon's wife told the police the location of the private residence had been exposed after Kwon's business started going awry. While Kwon's family home is in South Korea, the headquarters of Terraform Labs are in Singapore. Kwon himself has gone quiet online. Until recently, he has been a frequent user of Twitter, but his last thread promising to help the Terra community came 2 days ago now. He has also been absent from discussions on proposals for going forward with Luna on the Terra Research Forum. Meanwhile, Redditors are questioning what he may be up to now and whether he will ever be heard from again, while numerous posts on online crypto communities are disparaging Kwon, with some claiming they have lost their life savings. For Forecast, I'm Danny Park.
Staying with the stablecoin theme, Tether has stabilized after burning tokens amid redemptions. According to data from blockchain tracker Whale Alert, the world's largest stablecoin destroyed a total of 3 billion USDT tokens. CoinGecko data showed the USDT's market capitalization was at $79.41 billion Friday morning Asia time, compared with $82.9 billion just 24 hours earlier. Tether is subject to burn an equal amount of USDT when users apply to redeem the stablecoin for fiat. The price of the dollar-pegged USDT was at $1.01 per Friday morning in Asia after recovering from a 24-hour low of 98 cents. You can find those stories and a whole lot more at vocast.news. And finally, in the land down under, Australians now have the option of investing in the country's first 3 cryptocurrency exchange-traded funds, or ETFs, and one of the operators, ETF Securities, is used to leading the way. It was the first company in the world to release a gold-backed ETF in Australia in 2003. Forecast Lachlan Keller examines the process of launching the funds and what they mean for the crypto industry.
What are challenging times for the cryptocurrency market, 3 crypto exchange-traded funds, or ETFs, quietly launched on Australia's CBOE exchange yesterday. Hopes are high, especially at ETF Securities, the company behind 2 of the 3 funds, which is banking on making the most of its experience of releasing a gold-backed ETF in the country almost 2 decades ago. Jeff Yu, CEO of Australia's Monochrome Digital Asset Management, described the launch of that gold ETF as a landmark event that shaped the market. But can the Bitcoin and Ethereum ETFs replicate that success? David Tuckwell, product and research specialist at ETF Security, said the company believes the investment vehicles could reach $1 billion Australian dollars, that's around $690 million US dollars, by the end of the year. Tuckwell added that the appetite for the ETFs is simply huge. However, the release of the ETFs in Australia hasn't been totally smooth, with the original April 27th launch date pushed back by 2 weeks due to last-minute delays. Kanish Chugh, head of distribution for ETF Securities, told Forecast the delay was due to third-party brokers unfamiliar with cryptocurrencies, not with the fund itself or regulators.
I think whilst frustrating to hit some roadblocks, I think it's one of those things, if we're trying to be first, we're trying to innovate, and we're trying to be, bringing something new for investors, you're going to have those roadblocks and we're going to have to overcome them.
The question now is, will the turbulent condition of the market at launch change the trajectory of the profitability of the crypto ETFs? Chuk does not think so.
At the end of the day, we're launching these products, for the sake of giving access. So, there'll be investors that sit there at the moment that say they may be concerned around, the price of Bitcoin, the price of Ethereum. There may be investors that say, well, this is actually a buying opportunity with how much it's come off over the past 12 months. It really depends at the end of it. We're not, it is a highly volatile asset compared to, say, gold, for example.
For Forecast, I'm Lachlan Keller in Melbourne, Australia.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Megha Chadha. Until next time.